This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro, and I'm going to tell you something from experience for me in my first couple of years of trading that I extended the period that I struggled because I was unwilling to do this one thing. Now, a lot of people talk about psychology. I personally think this is a part of what I'm going to discuss today is essentially part of psychology. But there isn't anything more important than this one stat that you really have to be able to follow and keep track of. So let's just start by looking at a couple of other sports. Now, trading obviously isn't necessarily considered to be a sport, but the reality is, I think you should treat it that way. You should almost treat it like a video game because we want to think in terms of numbers and statistics and not necessarily get caught up and wrapped up in the emotion of it. All right. So let's look at Aaron Judge, the number one, basically, best home run hitter in baseball right now. Notice all of the stats, and they even show after each pitch or every time they hit the ball what their exit velocity was and their launch angle. This is all fairly new, but they've been keeping stats forever, right? The batting average, how many home runs you hit, how many RBIs and all that. Now they're getting down to, the detail in the ball, in the exit velocity. And I actually think exit velocity is a great stat. And the reason is that it's how hard you hit the ball. Sometimes you can hit the ball really hard and hit it right at someone. And in the same way for trading, you can execute a perfect trade and lose money. All right. And that's what I want to get into today. So let's just look at one more sport. Look at golf. Look at the stats that they're talking about on here. It's unbelievable the amount of statistics they're keeping, and this is just for practice. But then when they get on the course in a tournament, we're seeing all this. They track every single shot, every iron. They know how far they're hitting every single club, how many times they get up and down from the bunker, all that stuff is all kept and tracked for them actually for every single tournament. So why would they keep track of all this stuff if it's not important? Well, it's incredibly important. And if you're not keeping a log sheet for your trading, and so the plan that the trading school that I created recently actually comes with the first course. You get at the end, I've attached a log sheet that has a lot of information. If you follow Van Tharp's stuff, I track all the R multiples on there. I make it really easy for you to track your R multiples and also figure out your system quality numbers, and all that stuff is all on there for you. You probably have to read one of his books to be able to execute it properly and make sure that you're doing everything right. But the information is there. You don't have to create it yourself. One thing I want, especially for anyone who has already taken the course and has this, I want you to add a couple more columns. I want you to add a yes column and a no column at the end, all right, for every trade. Now, why do we want to do this? Because just like your exit velocity in baseball, if you hit the ball really hard in baseball, but you hit it right at someone, it seems like you're 0 for 1, right? I mean, you got an out. It doesn't look very good on paper, but if you do a trade and you follow and you execute your plan flawlessly. You do everything you're supposed to do. You wait for the trigger. It's a trigger 2. You wait for the 2. You make it execute. You make it trigger, and then you go ahead and enter the plan with the proper amount of shares based on your plan, and then you follow the plan exactly. You trail a stop if it hits a target, you take partial profits, you eventually get stopped out or you exit the trade. As long as you followed your plan, okay, whether you win on that trade or lose on that trade. And you will follow your plan and execute perfectly and have a loser, right? You could have you could hit the perfect trade, hit it exactly how you're supposed to, and then immediately watch it drop against you and take a loss. That is going to happen in this game. Just like the hitter, like Aaron Judge, hitting a ball to the third baseman with 125 mile per hour exit velocity, and the guy catches it, right? I mean, it's just the part of trading. You're going to have to accept that. What you want to do, though, is distinguish not between winners and losers. Everybody's got their stats based on their wins and their losses and how important that is. But you really need to distinguish between whether you're doing a yes trade or a no trade. A no trade is when you execute a trade that isn't in your plan, or it might be setting up in your plan, but you don't wait for the proper entry. You jump the gun. You get in early, right? Or let's say you have a stock that looks like it's starting to trade okay, but then it's starting to pull back because the market's dropping, right? And so you just exit. I don't want to take a loss here, so you just get out. That's a no trade. That's a no trade. That's not a yes trade. Why is this so important? The reason why it's so important is that if you don't track this, you have no real way of knowing whether your plan is working or not. Okay, you need to go through every yes trade and keep the stats on that. And then the goal is to actually eliminate your no trades. If you can go through, so what you want to do is do 20 to 25 trade blocks. All right, I talk about this in the course. You do 20 to 25 trade blocks. Okay, and then you figure out how many of those are yes trades and no trades. All right, if you're not following your plan on 5 of 25, then you have to work on the next 25 trades. You've got to try and move that down. You've got to get the no trades out of your trading. All right. And if you just play with yes trades, now you have a plan in place. Now, the interesting thing about this, and one of the things that when I brought in the swing trading course, the reason why I wanted to do that is if you go back to Aaron Judge, so this is his exit velocity, but that's for one style of pitch. That might be a pitch that's waist high right over the middle. Okay, what about a pitch that's low and outside, or high and outside, or low and inside, right? I mean, I think low inside and low outside are your two hardest pitches to hit. How are his numbers on those? Right? And so you have to accept that not every trade is actually going to be the same. And every setup is going to be a little bit different. And if you follow your plan, so let's say you have a reversion trade and you have trend trading, right? You have two different types of setups. And again, I go into this a little bit more detail in the course, but the thing is that if you have those two different setups, you have two different equity lines, and you should have two separate trading logs. So you should have one sheet, and at the bottom it should say trend trading weekly, daily, and then right next to it you might have compression-based swing trading, right? And they each have their own log sheet. You want to track them separately. And the reason is that they're going to have their own equity line. Now, you might all have it all in the same account, right? You might be trading the same account that has, let's say it has 100 grand in it, and you have 50,000 that you're doing trend trades and 50,000 that you're doing swing trading on. Well, if you just have it all mushed together, you don't really know. So you have to be able to log it in and know which plan is doing what. And the beautiful thing about having two separate logs is that you can see that when one plan is working, the other plan might not be, might be losing, might be breaking even, but you're going to have one of your plans working at a time. If all of your plans are working at once, that's great. But the reality is that's probably not going to be the case. You're probably going to do really well sometimes when you're trend trading. And at that point in time, you probably won't be doing great with your really short-term swing trades or day trading. And then there might be periods where you're struggling with your trend trades. They're just pulling back or correcting, or you're getting stopped out in some of that, but you're making money in your short-term trades. The beautiful thing is that if you've got swing trading on one end and you've got trend trading on the other, one of the two is going to make you feel better about what you're doing at that point in time. All right. And it's going to keep you charging on. And you have to accept that one area might be hurting a little bit while the other one is doing really well. That's a part of trading, and it's a part of having a smooth equity line. But for each of those setups, each of those plans, you have to track the yes and no's. Remember, the goal here is to track the yes and no trades. Why? Because the more yes trades you have, the more likelihood is you're following your plan. And if you're following your plan, then you can tweak your plan. You do it in 20 to 25 trade segments. And if you can do that, then your trading is going to improve because you're eliminating these problems that you have. You're going to have a tendency of either you're one of these guys that likes to exit early or likes to jump the gun. All those things are going to show up in whether it's a yes or a no trade. So you've got to eliminate the no's as much as possible. You're going to have a few of those mixed in every now and again, but the goal here is to have the majority of your trades be yes trades, and then you can really, in each setup, each different program that you're running, in each log file that you've got, you're going to have a really good idea of whether that plan is working or not. All right. If you have any questions, let me know. Thanks.